Hello, everyone, and welcome to the monthly memo from Charles Aris Executive Search, where we share the latest trends in talent and recruiting. I'm your host, Chad Oakley, CEO of Charles Aris, and today is Thursday, October 19th of 2023. Hope your fall is going well. As always, we'll start with a reaction to the monthly jobs report released by the U.S. Bureau of Labor Statistics on the first Friday of this month. And then secondly, we'll talk about how that report compares to what we're seeing at Charles Aris at the executive white-collar level. So let's dive right into the jobs report, and oh, what a surprising number it was. The U.S. economy added 336,000 jobs in September, which was more than double the consensus estimate from polled economists and the largest increase seen in the U.S. since January of this year. In fact, it's the only month this year where we've seen job gains in the 300,000 range. January was 472, but every other month this year, with the exception of January, has been below 300,000. So 336,000 is a significant number. Actually, it's quite significant. Check this out. I did a little bit of digging. Take from the year 2000 up until March of 2020. So let's take from January of 2000 up until March of 2020, right when the pandemic started, right? So right at the start of the pandemic, there's 230 months in there. Would you believe that 336,000 jobs that we had in September is more job gains than all but 9 of those 230 months? In other words, September was in the 96th percentile of job gains during that 20-year time period. That is pretty darn good. Very impressive, all things considered. Unemployment stayed at 3.8%, still an incredibly low number. Man, I got to tell you, all generations should be this lucky. I mean, yes, the pandemic was really challenging for all of us on so many fronts, and certainly on the unemployment front as well. But to now be at 3.8 and to be kind of holding steady at below 4%, it's pretty darn fortunate, and I certainly feel fortunate. I think we all should, all things considered, right? The average hourly wage grew by 7 cents from the prior month to $33.88 per hour, which lowered the annual increase run rate from 4.3% to 4.2%. In other words, last month, the average annual hourly wage increased by 4.3% year over year. This month, it's just down to 4.2%. So that in and of itself is good news, right? We actually need the wage growth rate to continue to drop. But a 4.2% annual increase in wages is still higher than Jerome Powell and the Fed would like. So while many people are predicting that the Fed will hold off on increasing interest rates for the balance of this year, I definitely wouldn't bet that increases are truly over and done with. If wages continue to grow year over year by more than 4%, I suspect the Fed will have little choice but to raise rates again at some point in the next 6 months. Overall, as you know, at Charles Aris, we like to look at the economy from the employee standpoint. And if you're an employee, this economy is pretty darn good, right? There are still many jobs to go around. Wages are increasing, sure, albeit a little more slowly than last year, but they are still increasing. In other words, if you want a job, there are jobs to be had. And if you don't like what you're doing in your current job, you've got options. That is the ultimate definition of job security, and job security is a very good thing. Whether or not we have a formal recession is still up in the air, but if you look at the economy strictly from the jobs report perspective, this definitely feels like a soft landing in the making. So hopefully that will continue. Okay, let's shift gears and let's talk about what we're seeing at Charles Aris, right? While the jobs report would indicate that the market continues to be very robust, that's not always the case at every level, right? What happens at the hourly level isn't always what's happening at the executive level. Some of you may remember that a number of months ago on this podcast, I mentioned that companies were talent hoarding at the hourly level, right? Companies were basically having PTSD of sorts from the pandemic recovery when they couldn't find or retain enough hourly workers. In an effort to make sure that they didn't experience that disaster again, companies have been holding on to their hourly workers, even if they don't need all of them, right? In some cases, they have been lessening the numbers of hours worked by those workers, but they weren't laying them off. Furthermore, we were finding that companies were willing to lay off more senior employees that were more expensive to pay to retain those hourly workers, right? So while blue-collar workers had a lot of options from an employment standpoint, white-collar workers didn't have quite as many, all right? So I made that statement about 4 months ago, and since that time, over the last 4 months, it's fair to say that we have seen a continuation of that trend occurring. Companies have effectively been sitting tight on executive hiring. They've been stuck in, shall we say, a wait-and-see mode, which, of course, is more than understandable given all the recession talk that we're experiencing in the marketplace. However, I do have some good news. At Charles Aris, we are starting to see some green shoots coming through. A small indicator is that our firm's search count is up 10% in the last 4 weeks. Hard to say if that trend will continue, but I suspect that it will. And here's why I suspect that it will. We're having a lot of conversations with executives at our clients. And the business leaders that we're talking to have basically accepted that higher interest rates are the new normal, and they're likely to be here for a while. But the good news is the economy seems to be chugging along okay too. I've had a number of our clients say things like, Chad, we keep hearing that a recession is coming, but we just aren't seeing it on our end. And even if there is a more formal downturn, it just doesn't look like it will be that prolonged for us. So that additional 10% that we're seeing is from companies growing a little tired, if you will, of wait and see mode, and they are starting to emerge towards growth mode. And we believe that that will continue to be a growing trend. There you have it. So as always, thank you for listening and for subscribing. From all of us here at Charles Aris Executive Search, this is CEO Chad Oakley. Looking forward to talking again next month. Happy recruiting, everyone.